Good evening and welcome to a brand new show of Markets Tomorrow. After 3 days of a straight line uptick, today was the day of decline. So what exactly could influence your portfolio tomorrow? The fact that Nifty is struggling to stay above 6150, technically how crucial and how important is that? I will discuss all that and much more for you in this edition of Markets Tomorrow. But before we do that, here's a quick roundup of how things progressed for Indian markets for the day gone by. Nifty has closed below 6100 after 3 days of a vertical climb. Banks topped the selling list across the board, be it private or PSU, mid or small cap. The entire banking pack today has got hit, and hit how? Poor economic data from China continues. That had a linear impact on Hindalco, Tata Steel, Sesa Sterlite, and then to a large extent even names like GSPL and Jindal Steel. What was the real outlier today? Capital goods space. On a day when markets came down, a highly economy-related sector, capital goods, managed to outperform Indian markets. BHEL, NLT, and Siemens, they were three prominent gainers for the day. Consumer stocks are looking slightly rusty. They are no longer considered as defensives in a falling market. They are no longer outperforming Indian markets. HUL, ITC, and Asian Paints had a poor day. Nifty gainers, interesting names: Tata Power, JPA. Weak names, weak groups, weak businesses, they outperformed on a day when markets were down. Nifty losers, and banking really right at the top, followed by Grasim, and then we also saw some unwinding in metals. From the mid-cap space, it was party time for hotel stocks. Across the board, hotel stocks appreciated, and the rally was largely led by India's biggest hotel chain, which is Indian Hotels. It was another good day for mid-cap IT. Mindtree and Persistent, they both managed to buck the trend. So how should one invest in this kind of a market where markets are range-bound? Mid-cap stocks are outperforming. Global concerns are not over, but domestically things are looking up. So Kumar, Managing Director and Chief Investment Officer of Franklin Templeton Asset Management, giving him companies Sudeep Bandyopadhyay, President Testimony Securities, and to give us a better understanding of charts and the short-term market direction and movement, Sandeep Wagle, Managing Director and Founder of Aptar Technical Advisories. Gentlemen, good evening to all of you. Thank you for joining us. Sandeep Wagle, 6150 is the upper end. We failed to cross 6150. Will history repeat itself, which is, will we go back below 6000?
Good evening, Nikunj. I would say that if we break 60-50, then my view would be bearish. Then I would talk of a level of 5950, probably even 5900. Till that time, I would still think of going long, because I still see this as a corrective move. Though, yes, I do agree that some of these banking stocks have cracked down. We have taken some long positions in the last half an hour or so, and I expect a 50, 70, 80 points up move in the Nifty over the next couple of trading sessions. So probably you can call it as a consolidation. Not very clear as far as the Nifty, Bank Nifty is concerned, but stock specific, some stocks are showing positive patterns. So I'm not very, very bullish, but definitely I don't want to short unless 6050 is broken on the downside.
Sudeep, let me give a positive spin to the market. Even though benchmark indices are looking slightly rusty, at best we are in a trading range. If I map mid-cap stocks, and there are a lot of mid-cap stocks which are just moving from strength to strength. Market breadth, not bad, and the list of 52-week high is actually a very expanding list.
I completely agree with you, Nikunj. I think there is absolutely nothing to worry about the correction we did witness today. It was on the back of the Chinese PMI numbers which came out, and it was not at all good. But I think we shouldn't read too much into that, particularly because of the fact that we had Chinese New Year related celebrities and celebrations, and the Chinese market was closed for some time. So we shouldn't read too much. There is a concern as far as China is concerned, but we shouldn't read too much. Of course, in the domestic market, we have a huge worry in terms of the non-performing assets of PSU banks, and the United Bank of India episode kind of highlights that issue. So there is a concern, but I think it's got a bit overblown. I won't be surprised if markets corrects, and I believe firmly that there are excellently performing mid-cap and small-cap stocks, even in this market. All these corrections are probably an opportunity for one to build portfolio with good stocks in the mid-cap and small-cap. Till the elections, probably market will continue to remain range-bound. It's very difficult for the market to break out either way. But for an investor, this is a great opportunity to build a quality portfolio by selecting the right stocks.
So Kumar, coming on banks, and given what is happening to the economy, I guess it's difficult to make a constructive case for banks. Are you worried about your large exposure to private banks? Because if I look at a declared portfolio, your top holdings are Kotak Mahindra Bank and HDFC Bank.
Our largest exposure, those banks are extremely stable. Their fundamentals have not deteriorated at all. If at all, I think on a relative basis it's improving because the other banks are struggling, which means that these banks can continue to gain market share and probably retain their margins. So our long-term thesis on private banks has not changed one bit at all.
Sudeep, is it time to be a contra buyer in private banks? Things are sticky, but they're still doing all the right things.
I agree with you, Nikunj. I think, that's been the strategy we have been advocating to investors for quite some time. PSU banks were looking attractive in terms of, their valuation and things like that. Some people were getting carried away, and we kept on warning that I think the entire, the NPA saga is still not over. Economy has slowed down significantly. PSU banks with not so tight control will bear the brunt, and that's exactly what is happening. Of course, the 10% plus NPA was not expected, but overall, I think there is significant pressure on PSU bank portfolio, whereas some of the private sector banks, in particular the large cap private sector banks, have been doing things which are all absolutely correct. They have been tightly monitoring the asset quality, and definitely these kind of corrections where everybody sees a correction and across the sector is an opportunity to pick up good quality private bank stocks.
Okay, tomorrow as a theme, it's going to be telecom. The new telecom M&A guidelines are out. The version is very watered down. This really could move the needle for Bharti, maybe for Idea, because these are two companies which have got strong balance sheets, and they really could be hunting for other players either to gain market share or really to consolidate their presence in those markets. Sudeep Bandyopadhyay, lot has happened for telecom sector per se in this week, in last 15 days. Is it time to be a contra buyer in telecom?
I think, Nikunj, today's development is extremely positive. I think the industry has been waiting for the guidelines to come out. Very clearly, no country can survive with so many telecom players. There has to be consolidation. The writing is on the wall. Some of the smaller guys are really stressed. They want to exit. Some of the larger guys want to consolidate, grow even bigger. So providing them the enabling environment for all these adjustments was the duty of the government. Finally, the regulations look like implementable, workable, and I would be surprised if companies like Bharti, which you mentioned, and Idea gets into consolidation mode, goes into acquiring some of the weaker competitors. Aircel is definitely been looking around for an exit, and I think that will be a very interesting play. Some of the other unlisted companies like MTS, which is Shyam Systema, separately you should look at Uninor. These companies, though unlisted, are definitely going to be in the game either as an acquirer or even at some stage they may look at exit. So I think interesting time for the telecom stocks. One can surely look at acquiring Idea at current levels because that even otherwise looked attractive.
Sandeep, the charts for Bharti are looking slightly shaky. 2013 was a good year for Bharti, ditto for Idea, but 2014 unfortunately has turned out to be a dangerous year for telecom per se.
Nikunj, I would agree with you. I sense a 5 to 7% downside as far as Bharti is concerned, and it has broken a crucial support, I would say, at 300 today, and maybe not with that great volume. So I would talk of downside move up to 285 to 280, somewhere around that. So 5 to 7% trading downside, nothing beyond that.
Sandeep, if Nifty has to, let's say, go back to 6,000, which are the groups to your mind that could really lead the decline?
Well, as what we have seen today, I think banking, if it doesn't hold, then probably we may go down to 6,000 or 5950, may be tested. But if banking bounces back or gives a small move, which I think a good chance that may happen, I don't think we will break down of 6,000 and go towards those levels. So I would definitely not short at this level. I would wait and watch.
From the mid-cap IT space, Persistent, Mindtree and Hexaware, these are three stocks which have managed to buck the trend. In general, today it was a good day for Mindtree and Persistent. Sudeep, what do you like from the mid-cap IT space? Do you like Mindtree, Persistent or Tata Elxsi?
I like my Persistent, excellent company, great results, great team. I think it's a long way to go, Nikunj, from here on. Investors with 1 year plus time horizon should definitely look at Persistent.
Sandeep, I'm sure you like all three of them because the charts for Persistent, Mindtree and Tata Elxsi are looking very exciting.
Nikunj, I have taken a position in Hexaware.
You like the fourth one?
As a trade, I would go with a Hexaware. If you ask me for a 3 to 6 month kind of a time horizon, I would go with a Tata Elxsi.
What about law of gravity, Sandeep Pagle, for some of these mid-cap IT stocks? Tata Elxsi has moved from 250 to 500. Persistent has moved from 450 to about 1100. Ditto when it comes to even Hexaware.
Well, it's a little difficult. I'm not a Newton or an Einstein to answer that question. But having said that, that shows the trend, Nikunj, and I would be very comfortable that in this kind of a market, if it is moving up, I still see some more upside. Certainly not a 50-70% upside, but certainly 10-15% more is in the offing, and I would play for that.
Sudeep, every time markets have been volatile, typical classic defensives, they often tend to rescue investors. But HUL, ITC, Britannia, Colgate, nothing seems to be happening in the FMCG space.
I agree with you, Nikunj. In fact, I think somewhere the investors are getting a bit worried. The valuations were very rich. If you recollect about a month and a half back, it looked too rich, in fact, for some of these counters. And I suspect that some amount of profit booking is happening. Remember, most of the investors were heavily invested in FMCG, and I would be surprised if they are currently taking out some of their profits in these counters and probably putting some of that money to work in other sectors. Coming to specifically ITC, I think the biggest worry for the investors post last quarter results have been, the volume growth has not really made investors very happy. Yes, there was price hikes and that led to the top line growing, but the cigarette volume growth was a matter of worry, and I think that's what is kind of pretty much worry across the board for FMCG companies. The volume growth is just not coming.
So Kumar, the volume growth is also not there for autos as a group. Do you think an excise duty cut could really help spurring demand for cars? Do you think it's a good time to revisit auto? Because currently markets, they just love to hate auto stocks.
To some extent in the short term, but from a medium to long term point of view, a 4% excise duty reduction is not going to have a big impact on the size of the market. So we don't see that as a very material development from a long-term point of view.
So Kumar, the consensus view on D Street is that the second half of 2014 will be a much better period for Indian economy. Indian markets will make a comeback. So if one works with the template that if we have an economic bottom in place and Indian economy will start expanding in the second half of 2014, is it time to revisit cyclicals?
Yes, that's true. From a short-term point of view, I think some of the beaten down stocks will do well. Yes, we have to look at some of them. But at the same time, we can't, the portfolio cannot be built on short-term considerations. So we have to look at companies which can ride through cycles. So there will be some changes to the portfolio, but don't expect very dramatic change.
Sandeep Agle, Bajaj Auto today managed to buck the trend. If I just map the 3-month chart for Bajaj Auto, it's finding support at 1850, 1860?
Some kind of a support, yes, but the basic trend, short-term trend is not so positive. It is making a lower top, lower bottom on the charts. No, I'm not that bearish, as I said, with the markets. Don't see it breaking 1800, don't see it breaking 1900, somewhere in between. I would not take any action on this.
So Sandeep, let's say if you have to carve a option strategy for our viewers, what would you like to buy? Would you like to buy a 6200 call or a 5900 put?
Well, we have had a short strangle where we have sold and we expected Nifty to be in this range of 6000 and 6200, and that has worked out well for us. We have made almost 70 points in this month. But now what does one do? I still expect the range to be held on to. I don't expect the 6000 to be broken on the downside. I don't expect the 6150, 200 to be broken on the upside. But you don't have that kind of time where you can sell. So I would not take that call.
So the markets cannot remain in a range endlessly. Everyone on D Street is convinced that markets will not do anything till the outcome of election. Election is still 3 months away.
Correct. I agree, Nikunj, but there can be a breakout, and I will put that to global news flows. Look at what's happening as far as Fed tapering is concerned. I think in spite of some of the indicators not being too positive, US Fed probably will go ahead with the tapering. And instead of what we are now used to, about 10 billion reduced every policy, if the tapering quantum increases, I think that will bring back nervousness into the markets and a bout of FII selling that can destabilize Indian markets. The other area of caution emanates from domestic concerns, which will hover around what we are seeing being played out as far as PSU banks are concerned. If more skeletons come out of the cupboard, and that can shake the investor confidence in even larger banks and also private sector banks, that can lead to Nifty coming down and breaking the range. On the upside, I don't think we will see a major rally till at least the final set of opinion polls start coming out.
Stocks to watch for tomorrow morning. For that, let's go to Darshan.
Nikunj, the first stock that you have to watch out will be Care Ratings, because what will happen is on Saturday the bids will open in terms of who are the buyers for the stake that IDBI and the other 4 banks wanted to sell. The market buzz is that the deal could happen over 900 rupees, and there is a very high possibility of an open offer coming through. So there is a significant upside still left on Care Rating, but that is the dealing room buzz. So that is something that you should watch out for. And also DV's Lab is trading at record highs, looking very strong on the charts. So on the basis of technical and FNO trends, dealers are recommending accumulating DV's Lab also.
Darshan, thanks a lot for that. Sandeep Agle, give me your top ideas for tomorrow.
Nikunj, I would buy into an Apollo Tyres, which has almost closed at the high of the day. See some more momentum over the next few trading sessions. Stop loss of 120, target of 132. And a sell in Bank of Baroda, a stop loss of 519, target of 495.
Sudeep, how are you allocating capital? Give me your top ideas where you are happy to allocate, let's say, 7 or 8% of your portfolio.
Nikunj, I think what we have been doing is we have been trying to pick up some of the interesting names which haven't appreciated significantly and sectors which are out of favor. I've been talking about a company called LIC Housing Finance. I love that company. Excellent balance sheet, great potential, excellent loan book growth, 97% retail assets, and definitely far away from the NPA problems other finance companies are facing. So I look at 30 to 40% appreciation in that counter over the 6 to 12 months time. I also very bullish on Maruti Maruti at current levels. I think the correction in Maruti was significantly overdone. The impact of Gujarat decision is not going to hit the company till FY18. The positive developments about new models being announced and being launched over the next 2-3 years will definitely help Maruti utilize its cash better and reward the shareholders in more handsome manner. So I think these two are my top picks.
So Kumar, closing comments from you. Ahead of election, how exactly are you positioning your portfolios? Are you taking any big bets? Are you raising some amount of cash so that you got some gunpowder ready and you can buy if markets fall?
We are always re-evaluating the holdings in our portfolio. And so when we look at stocks and when we review them every quarter and sometimes more frequently, we look into all the economic factors that are going to affect their long-term prospects. It's not that we want to wait for elections to change our portfolio. So we're looking at changes on a week-to-week basis and sometimes on a day-to-day basis. But that doesn't mean that we find ideas that we need to include into the portfolio relative to what we already have. So I'm not sure that the portfolio will change very dramatically because of the elections. But if there is improved confidence about the turnaround of some of the stocks in the cyclical sector, if we believe that the turnaround is not about just one uptick, but about a fundamental change in their levels of profitability and return on capital, yes, I think there will be a stronger case to include some of those names. So we are doing continuous analysis to see how the medium to long-term prospects are changing, and will definitely change the portfolio going forward. But as I mentioned before, don't expect a very dramatic change.